Hi, Assalamualaikum warahmatullahi taala wabarakatuh and good morning. Today I would like to explain about how to prepare construction process accounts. Okay, look at these questions. PPK's Numberhad accepted a project to build single-story shop lot in private land. The project commenced on 1st January 2022 and expected to complete within 18 months periods. Below are the costs incurred for the year ended 31st December 2022. So they give us a list of costs, and then look at additional information. Number one, contract price is 55 million with a 15% retention money. Okay, retention money we will record into accounts receivable accounts. And then number two, regarding depreciations on plant, which is 20% per annum on cost. Okay, number three, regarding budgeted total cost, which is 32,450,000. Okay, so from this additional information, actually we can calculate estimated total profit. Okay, estimated total profit equivalent to contract price, actually budgeted contract price minus budgeted total cost. So budgeted total contract price in this case is 55 million, this one. Alright, 55 million, and then we minus budgeted contract cost. This will be your budgeted contract cost, 32,450,000. Then you will get estimated total profit in order to complete the contract, 22,550,000. Okay, so this estimated total profit you will record into accounts. Okay, so if you look at 18 months, that means for two different accounting periods. So how to allocate estimated total profit into a particular accounting period? So you will have two formula. Okay, two formula. The first formula you can calculate by using this formula. That one is known as attributable profit. Okay, attributable profit we calculate based on two formula. Either cost of work done to date, okay, you divide by budgeted total cost, then you multiply by ETP, estimated total profit. Or second formula, okay, second formula you can calculate, you consider value of work certified divide by contract price, but then you still multiply by estimated total profit. Okay, now look at the table. The first cost item, material purchase from supplier. So this cost item you will debit into construction in process account. This one, okay, you debit into construction in process account. And then material from store sent to site. Okay, this one also will increase your cost of site, so you debit into construction in process accounts. Materials returned to supplier. Materials returned to supplier, that means from our contract we return back to supplier, so it will reduce cost of project. This one we will credit into construction in process account. Next, wages paid for the year. This one also you will debit into contract account. And then wages still unpaid, this is actually accrued wages. Okay, this is actually accrued wages. This one is actually year 2022. This one year 2022. Okay, sorry for typo error. So this one you will also debit accrued wages, you debit construction in process account. Plant at cost 1,650,000, also you debit your construction in process. But remember, you have depreciation expense. Okay, you have depreciation expense 20% per annum. So net book value, cost you minus depreciation expense, you will get net book value. So net book value for plant you will record into construction in process on credit side. Okay, the balance, you record net book value, record on credit side. And then we also have head office charges, 183,700 ringgit. This one also debit construction in process accounts. And then production overhead, 396,000, also we debit construction in process account. And then we have cost of work not yet certified, and then cost of work certified. Okay, cost of work certified, you will record into accounts receivable. Okay, you record into your accounts receivable. Material on site at 31st December, this is balance, material balance carried down. So material balance, you will credit accounts construction in process accounts. Okay, so now let's look at construction in process account. This is the format. Actually, we have T format. We have T format like this one. And then we record materials from supplier and also materials sent to site. Okay. And then material return to supplier, you credit your construction in process account. Remember, this is debit side, this is credit side. Okay, so material return to store will reduce cost of work done to date. Okay, and then you debit construction in process also with your wages paid, 550,000, and then wages accrued, plant at cost. Okay, plant at cost, you debit construction in process, but the net book value you credit. Okay, so how to record your net book value? Cost minus depreciation expense. Okay, cost you minus depreciation expense. So your depreciation expense you calculate based on 20%. Based on 20%. 20% information number 2 multiply by cost 1,650,000. So you will get 330,000. Okay, to calculate net book value. Okay, net book value for plant. Cost you minus 330,000, then you will get net book value 1,320,000. Okay, and then you record production overhead. You record your production overhead. Finally, you total up. Okay, you total up this amount and then you record into your balancing figure. This will be your balancing figure. Okay, so actually construction in process consists of 3 stages. The first stage is used to record cost of work done to date. Second stage, you will record attributable profit. Third stage, you will record the balance. Balance brought down for accruals and also prepayments if you have. Okay, now we proceed. Total is 3,549,700 ringgit, and then you minus these 3 items. In this case, material return, balance of material at the end of the year, and then net book value for plant. Then you will get cost of work done to date. Okay, cost of work done to date, in this case 1,943,700 ringgit. So this balance, you bring down the value to second stage. Remember, I mentioned just now you have a second stage. So this value you bring down to second stage, and then at second stage you will record attributable profit. So in this case, we will apply first a method, okay, to calculate attributable profit. Remember, estimated total profit, you must allocate to 2 different accounting period in this case, because this project will take 18 months to complete. It involves 2 different accounting period. So how much you will allocate for the first year? Based on this formula, you take cost of work done to date, divide by budgeted total cost, and then you multiply by estimated total profit. So this is your cost of work done to date. You divide by budgeted total cost just now. Information number 3, 32,450,000. You multiply by estimated total profit that we have calculated earlier. Okay. Then for these questions, you will get 1,350,706. And then you total up these 2 figures. Okay, you total up these two figure. So this will be your contract revenue that you send to contracting account actually. You send to, you allocate, not you allocate, you identify as contract revenue, whereby you can record into your uh, income statement. Okay, then last stage, this is your third stage. Third stage, you record the balance. Okay, balance brought down for material on site, as well as net book value for plant. And then don't forget your accrued wages, unpaid wages. Okay, you record under third stage. So this is for construction in process accounts. And then we proceed with accounts receivable. So under accounts receivable, this is our customers accounts. We we debit with cost of work certified. Okay, and then based on retention money, we record as balance CD. So the difference means amount that customer have to pay to us. Okay, so in this case, cost of work done to date given as 2,860,000. So 15% retention money, 15% retention money. This information under first additional info, multiply by 2,860,000. Okay, 2,860,000. Then we will get 429,000. Okay, 429,000 is your retention money. So balancing figure, okay, 2,860, you minus your retention money, then you will get amount that your customer have to pay. Okay, they need to remit the amounts to the company. Okay, this value, this value. And then don't forget to bring down your retention money, record as balance. This is balance brought down, balance brought down for accounts receivable. Okay, balance brought down for accounts receivable. That's all. Bye. Assalamualaikum.